I'm Chris Whitehurst, and this is the Terms, Tips, and Tricks for Real Estate. Each episode I tackle a different term or trick and teach and guide you through the journey of real estate. Go ahead and subscribe and ring the notifications bell. There's a new one of these episodes each week. This is episode 76, and we're actually in a three-part series on taxes. Today we're going to be talking about county taxes. This three-part series is going to talk about the additional fees that are associated when you try to sell your property. The full amount will be broke down in your seller estimated net sheet and your closing disclosure. It's important to consider these fees because they impact your bottom line. There are some things that are certain in life, death and taxes. The county that your home is in requires property taxes to be paid annually based on the assessed value. Taxes are a first position lien, meaning they will be paid before anyone else. If you owe back taxes on your home, they will have to be cleared before the deed can be recorded. When you sell your home, the county is going to ensure that the taxes for the year are paid. The attorneys working your closing will ensure that the taxes are up to date and that the seller is paying the taxes on the day that they own the property. For a buyer, it's important to know that the amount of the taxes that you pay is typically added to your payment and held in escrow. You can look at episode 20 to find out more of that. In North Carolina, we reassess every 10 years. If your home goes up in value, which it likely will, your payment will need to go up to cover that amount. If you like these videos, there's more of them along with a ton of other great content at chriswhitehurst.com. You can also check me out on Facebook, YouTube, and other social media sites. Be sure to like and subscribe on each and stay plugged in on all things real estate. Until next time, I'm Chris Whitehurst. Welcome home.